You know, historically, in the weeks and even months leading into midterm elections, investment markets behave a little differently. But now, with the election day kind of in the rearview mirror, local financial professional John Vandergriff from Blue Ridge Wealth Planners is here to explain what we really need to know. And I guess the election is not over yet because we still have some things. But with that in mind, explain how the market behaves differently, say, like in a midterm election compared to maybe a regular election year or a non-election year.
Well, I think, you know, when you look at midterms, you have kind of some effects from that presidential election that may sway, you know, voters if they're not happy with a certain direction, or if they are, it may cause a changing of hands in both the House and the Senate. But I think when you look at the markets and zoom out a little bit, markets want a certain direction. They don't want the ability for there to be a lot of change. And so normally, you know, when you look at most years, you kind of have a gradual increase, but once you get kind of a set direction, that releases most markets to be able to just climb into Christmas season and go up with revenues.
So right now, if we kind of have a split situation, or even if Republicans control 2 of the 3 with the president, that means a whole lot doesn't change.
Well, yeah, and that's good for the market because they want that stability of not widespread changes with legislation and things that will affect, you know, the economy and, you know, in kind of a latter result, the market. So I think that's what a lot of people have hoped would happen with this election, not to get political in any way, but just more for the stability of the market.
Well, a lot of people think that way. It's like, well, when you have 2 parties splitting power, then nothing gets done, and that's better than drastic things getting done.
That's right.
How do you approach investing this time of year and with the midterms and...
Yeah, I mean, so the good thing with markets, too many times people try to be day traders. The best way to handle the market is just to think long term. So really, whatever happens with the election shouldn't impact long term the approach that you have with the risk that you want to take, with the goals that you have for your money. You've got to be able to almost weather some of those emotional storms that you have and make sure that you really keep in mind what your goals are and position toward those more than anything.
Is this change much for those with retirement accounts? I mean, our viewers who are watching have a lot of that kind of... Is this just kind of one of those times you need to stay or?
Well, so I think more than the markets, the things that are happening outside of this election, you know, with interest rates and inflation are obviously having a lot to do. Really with retirees, the bigger impact is more the safe money or the bond side. So I think, you know, stock monies that we know are risk are fine to leave alone, but that safer side are some of the areas that we've tried to find alternatives for people to really have that good safe part whenever bonds and stocks have really been losing money at each turn that we've seen this year. So just trying to make sure that you have more options is always a good thing, not just limited to stocks and bonds, and then make sure that you build a plan around that. And that's where most people, when they get scared, they tend to do nothing. Sometimes there are some strategic things, but you've got to keep that in mind with just an overall planning approach. And if you don't have one, obviously find somebody to help you in that as well.
Which is you coming here. We got the inflation, we have high prices, we have high interest rates for loans on mortgages. What would you recommend? I mean, I know without knowing all their details, what would you recommend?
So again, I mean, we'll see tomorrow when some of the CPI numbers come out, but the Fed has made it very clear they're going to continue to raise interest rates. So it's just what will happen and what will be some of the ripple effects in our economy that happen. So I would say if you're considering that, you know, don't make any rash decisions. If you see something that you want, regardless of price, just make a decision. But otherwise, you know, maybe see what happens. So,
John, thank you as always for coming. Bo.